Hello, everybody. How are you doing? It's Ron, Commodore, and Nisha Thyan. And also, we have a guest here, Suresh, as well, from CENTUM, a mortgage broker. So we're going to ask him a few questions this evening. And just so, just to get some understanding of what's going on, Suresh has been working with us for quite some time. He deals with A, B, and C lenders, and also private as well. He's been doing this for over like 15 years. So we're going to start off and ask Suresh a series of questions. Hopefully this information will be vital to you guys. And at the end, if you need some more information, you can please contact us and we'll leave that contact information to you at the end. So I'm going to hand this over to Nisha and start asking them a few questions. Hope you all find this information useful.
Oh, hi, Suresh.
Hi guys, how are you?
Hi. So the very first question that we ask mostly as real estate agents is it a good time to buy? So I will actually pose that question to you on the mortgage side.
Okay, so in the mortgage side, there's not much of changes happened so far. I'm not sure about the future yet, but so far it is the same as before almost. So we don't have too much of a problem getting a mortgage at the moment.
Oh, well, great. Just wow. How is it? What kind of challenges are you having right now during the COVID-19?
Okay, so the one main big change is with the B lenders at the moment. So what they have done is, I don't know if you have, before they used to do it with 10% down payment, and they'll back it up with a combo of 10% second and the rest of the 80% with their institutional. But they have changed that to 20%. The government changed that to 20% and no combo deal. And now B lenders have changed it to 25% down payment. So that's where we see most of the changes in. Other than that, it's almost the same.
Well, how about if they had a mortgage already pre-approved and now you've gotten to this COVID-19, how does that affect you?
As long as you still have a job that you can repay with, you can still get a mortgage.
Okay, so if you're still employed during these times, that's what they're looking at.
That's right.
Is the income.
Yeah, just like usual, basically, if you're lending out money, you're going to see how they're going to repay.
Yes.
That's what the banks are basically looking at.
Are you pre-COVID times and during these times too?
That's right.
Exactly. Yeah. That if you're still employed, you can still get that mortgage.
That's right.
Yeah.
Exactly.
So this is a question that I get asked quite often from a first-time buyer. How much down payment do I need? What's the best amount to get started?
Still, it's the same usual. So first 500,000, you will have to come up with 5% down payment. And anything after that, you'll have to come up with 10% down payment. So for example, if you have a $600,000 house, you're going to purchase, for the first 500, you have to come up with $25,000, which is 5%. Okay. And on top of that, for the next 100,000, you'll have to come up with 10%, which is $10,000. So altogether, you're looking at 35,000. Whereas if it's a $700,000 house, for the first 500 again, it's 25,000. The next 200,000, it will be another 20,000 additional, not just 5% throughout. Okay,
so it depends on the amount of the purchase. So they're looking at, as the amount increases, their down payment increases according to that. So it's not just that here's 5% to get started on a $700,000 house. It's more incremental in terms of the percentages.
Yes, anything over $1 million, you're looking at mostly 20%, depending on each institution. You're probably looking at 20% or so. Oh, nice. Minimum 20%, I should say.
Okay, great. Now, if we had a client and he got pre-approved, how long would that pre-approval last?
So it depends on the financial institution as well. Okay. Again, they'll have to be employed still when they actually do the purchase. And also it goes anywhere between 90 days to 6 months, depending on which financial institution it is. There are
Okay.
exceptions done to certain deals as well, but mostly it's 90 days to 6 months, let's say.
Right. So the A lender or B lender or C lender, they have different levels of how long they would extend that to.
So when we are talking about pre-approval, it's mostly through A lenders. They
Okay.
will give us the pre-approval. B lenders, I have like, we usually don't do pre-approvals for B lenders, but we pre-qualify them.
Okay.
So let's say when you have a client, we check and see what they can, what their capacity is to purchase, and then we go from there, and then we submit it to the lender when it comes to anything other than A lenders.
I see. Okay. So what kind of information do I need to just for the pre-approval part?
Again, whatever you need to purchase, whatever you need to go with a live deal, that's what we look for in a pre-approval as well. Just because it's pre-approval, we just don't like eliminate certain things. So again, income, credit, down payment, the basic stuff, you definitely need to have it either or. And we like to see proofs of all of this upfront before you go ahead shopping.
Okay.
So that we don't have any hiccups at the end, right?
That's true. So there's no surprises at the end, especially after you've submitted an offer.
That's right, exactly.
Yeah, yeah. And there's one question that I just thought of, Suresh, is the credit score. What's the minimum score that you can work with?
We can even work with reject scores, like where there's no scores. But again, the lending criteria changes when it comes to that. You will need to come up with 20% down payment minimum, or sometimes it's more, depending on each criteria. But yeah, so it depends on which lender we're going to go with.
Oh, I see. Okay, okay.
Good to know. Now, Suresh, I know you specialize working with a lot of self-employed people. So what type of information would you need to do to find out what kind of stuff they can afford for a self-employed person?
Okay, so when it comes to self-employment, if we are going to look for a better rate, we would have to go with an A lender. And when we go with an A lender, most of the time, they will look at line 150 on your notice of assessments, and you have to average it for 2 years, and then we can gross it up with 15% in most cases. That's one way to do it. Another way to do it is add back some of your expenses back to your income. Don't just do it, you go to a professional to do it, to qualify yourself first. So we can add back some of your business expenses back into your income, and then we can qualify with that. Another way to do it is go with B lender. So let's say you make so much money and you're only showing a little, you're only claiming a little. What we can go with is we can go to B lender, and we can get it done with the bank statement. So whatever you put in the bank for the 3 to 6 months, sometimes they ask for 1 year. With that, we can do the deal, but they won't be able to take all the money that goes into the account. We have to deduct the expenses as well, but it's usually higher than what you have on your notice of assessment.
Okay, excellent. Well, thanks a lot for Suresh for sitting down with us for a moment. I hope you guys this was good and informational for you. So if you need to talk to Suresh and want any more information about this, please reach out to Suresh at 647-688-2663. Or if you need some more information about realty, buying or selling your home, please contact us at Next Realty Group. You contact Ron at 416-271-1106, and we'll be glad to help you with your real estate needs. Thanks, and have a great day.
Great. Thank you,
And
Suresh.
thank you for having me. Thank you for having me, and stay safe.
You too.
You too. Bye.